What changes has been seen after the liberalization? Ease of doing business. That's very good. If we talk about liberalization, it means making the rules and regulations easy or removing the restrictions or regulations from the economy. That is what the liberalization means. And because of the liberalization, the license, permit and quota raj was removed. Okay, it was not a part of Indian economy after the liberalization. So in the liberalization, what we have done, we have introduced the less regulations, less restrictions, and because of this, the license, permit and quota raj became the thing of a past. Right now, next, if I talk about privatization, because of privatization, Indian economy is known as what type of economy now? Let me know. Because of the privatization, Indian economy is known as what type of economy? Very good. Indian economy became mixed economy because government and private both started working together in the economy. That's why Indian economy became mixed economy. Achha, because of the globalization, which type of economy Indian economy became? Because of the globalization, Indian economy became what type of economy? The open economy. Okay, Indian economy became what type of economy? The open economy. And what does it mean? It means simply you can export and import without any restrictions. Open economy is a type of economy where there is no restrictions from the side of the government of the country on the export and import, or I can say on the foreign trade of a country. Right? Now, let's discuss certain questions first and then we will be moving forward. So you guys have to answer this particular question. First question is asking the informal financial institution do not include. So the question is a statement-based question, and maximum question you will see in the paper that will be statement-based questions. Okay, and two things are very important in the statement-based question. First, concepts. You should know each and every concept about a particular topic. And the second thing that is important, that is reading speed. Because statement-wise questions are time-consuming questions, that's why you need a reading speed also. So let's start. Or do remember the question is asking, do not include what informal financial institution. So first is saying individual moneylenders who could be traders, relatives, neighbors. Second is saying non-banking financial institutions. Third is saying groups of persons who could be operating as association and firms. Fourth is saying financial regulators. Fifth is saying local brokers. Sixth is saying pawnbrokers. Seventh is saying non-bank financial intermediaries such as the finance, investment, chit fund companies. And the last one is saying development financial institution. Now you have to tell out of these 8 statements, which of the following statement is not a part or not included in the informal financial institution. So we have discussed that there are two types of financial system. One is formal, another one is informal. If I talk about the formal financial system, it's a system that is regulated by the regulated entities like RBI, SEBI, ADA, etc. An informal financial system is a system where there is no regulatory bodies, no rules and regulations are there. So what do you think? Which of the following is correct? Okay. Second and fourth. Second is your non-banking financial institutions. Fourth is your financial regulators. Okay. What about rest? And others are saying D. C. Very good. The non-banking financial institutions, they are regulated by RBI. They were formulated under the Companies Act but have to follow the RBI's rules regulation. Second, financial regulators are whom? RBI, SEBI, ADA, PFRDA. These are what? Financial regulators. They are not a part of informal financial system. And the last one is 8th, development financial institution. These includes NABARD. It includes Exim Bank. It includes National Housing Bank. It includes IFCI, etc. So second, fourth, and eighth. These are the three which are not a part of informal financial system. So the right answer will be your D option. Okay, right answer will be D option. No video. Is everyone else facing the same issue? Is audio and video okay? Let me know. If there is no issue you are facing, then do write all okay first. All good. All good, all okay, all okay. So those who are facing video issue, do rejoin the session once. Just try to rejoin the session once because there is no issue from my side. Okay, let's start. So right answer will be your D option. Second, fourth, and eighth will be your not a part of informal financial institution. So the right answer will be D option. Okay, next question. Let's move to the next question. Second question is asking, read the following statement. Certain statement has been given to you. You have to read them carefully and choose the correct option in the relation to the concept of types of financial institutions. Okay, so question is asking that you have to read the certain statements. After reading these certain statements, you have to answer which particular concept related to types of financial institution is correct. Now, do let me know the types of financial institutions. How many types are there? If we talk about types of financial institutions, how many types are there? Let me know. No video, ma'am. Rejoin 3 times. Achha, those who are not able to see video, no video, ma'am. No video. So many people are saying no video. See, if you are having any issue now in video, you can go and check on the YouTube also. The YouTube same class is running simultaneously. If you are facing problem on this particular window, you can check on the YouTube. Okay, and after that, do drop a mail to the support at the ID. They will contact you. What issue you are facing, they will resolve it. Okay, for today's session, just go to the YouTube channel. Okay, and check there. Same class is running simultaneously there. Sure, let's start. So this is what we are asking about. And if we talk about the types of financial institution, there are 2 types of financial institution. I have told you, first is banking institution and the another one is non-banking financial institution. So let's see the statements. The first statement is saying banking institution, these are also known as depository institutions. So insurance, mutual fund, brokerage companies fall under this category. They cannot ask for monetary deposit but sell financial product to their customer. This is the definition given for the banking institution and depository institution. Okay. Now, the second statement is talking about non-banking institutions or non-depository institutions. And the statement is saying that insurance, mutual funds, and brokers companies fall under this category. They cannot ask for monetary deposit but sell financial product to their customer. Okay, now you have to tell out of these 2 statements, which statement is correct. Okay, now the options are statement 1 is correct and statement 2 is incorrect. Second, statement 1 is incorrect, statement 2 is correct. Third, both the statements are correct. And fourth, both the statements are incorrect. Now you have to answer which statement is correct here. A, B, C, or D, which option is correct? Do read very carefully. First statement is talking about the banking institutions. Second is talking about non-banking financial institutions or the non-depository institutions. Okay. So maximum are going with the B option. Maximum are going with the B option. Those who are watching us on YouTube, you also have to answer which particular option is correct. B, D, A, and C. Now different options are coming. Okay. See, if we talk about statement 1, that is definitely incorrect. The statement 1 is definitely incorrect, because if it is a banking institution, definitely they will be able to take the deposits, na? They will be able to take deposits. They can accept deposit because this is a banking institution. But if we talk about non-banking institution, if we talk about non-banking institution or non-depository institution, insurance, mutual funds, brokerage companies fall under this category. Yes, this is obviously correct, because they are not they didn't get license from the RBI Act or Banking Regulation Act. They cannot ask for monetary deposit but sell financial product to their customer. Okay, so it is very obvious that this is not a right statement. So this answer will be your, one second. The answer will be your statement 1 is incorrect, but the statement 2 is correct. Very good. So everyone went with the option number B, and that is correct. Other subject classes you can check on the YouTube. The study plan is already updated there. Hana, you can go and check the study plan that has been updated there. So let's start with from here, the triggered investment we have to discuss now. So liberalization, we are going to discuss the phase 3 liberalization from 1991 to 2010. This period is known as post-liberalization period. Okay. So what is triggered liberalization? That let's discuss that first. So first of all, it is saying 1991 was the year that India embarked upon liberalization, opening of country's economy to the world. It means we have done the globalization here. Now, there were 3 main economic reasons that led to this particular move that we have discussed. And in the last class, which happened on Friday, I have told you around 7 statements or the 7 reasons why this particular liberalization, privatization, globalization has been done in the country. So all those 7 points are very important to remember, the reason behind introducing LPG. Okay. Now, in the scenario of planned economy means the socialistic economy. Hana, planned economy means what? Socialistic economy. Now, how you can say? As we know, there are 3 economic statements. How many economic statements are there? 3 economic statements. One second. There are 3 economic systems are there that we have discussed. Capitalistic. Then second we have socialistic. And third, we have mixed. Capitalistic, socialistic, and mixed. These are the 3 economic systems we have. Capitalistic economy, what? It is also known as the name of market economy. Do remember the other names of the economic system also. This we are going to discuss in detail in the module A and B. But here I am telling you in very short way that what are the other names of the economy. You can call it market economy. You can call it laissez-faire economy. Both are same. Okay, you can call it market economy or laissez-faire economy. The socialistic economy is also known as a planned economy. Or you can call it a command economy also. Command economy. These are the other 2 names of the socialistic economy. And the mixed economy is also known as dual economy. So these are the other names of the economic system. Do remember that. Now, capitalistic economy is known as market economy. It means this economic decisions depends on the market. On market means on the demand and supply of the market. Second, laissez-faire economy means the economy where there is a freedom. That will be known as your laissez-faire economy. No video. Kishore sir, do check the session on YouTube. The simultaneously session is going on YouTube. You can check there. Okay. And after this class, do mail support ID of Adda 24/7. They will contact you. What issue you are facing, they will resolve it. For now, those who are facing any kind of issue in the video, do check on the YouTube. Session is going on there. Now, so that's why capitalistic economy, also known as a market economy and laissez-faire economy. The socialistic economy is what? The economy where the decisions mainly taken by government of India. The country's government is taking decision, that is socialistic. That's why it's planned, because government has planned what we want to do and what we are going to do, and that has to be followed by everyone. That's why it is known as planned economy. And why command? Because one centralized power is there who is giving you the command and you just have to follow that. Now, mixed economy is dual economy because both government and private are working together. That's why it's a mixed economy. Let me know clear these 3 economic systems. Other names are clear to each and everyone. So if you remember the concept, you do not have to mug up the names of the economics. Hana, just remember the concept. If you remember the concept, you can easily understand that why this particular economic system is known as with the other name. So focus on the conceptual understanding. Do not try to mug up the concepts. Now, so this is saying that in the scenario of planned economy, India predominantly looked inwards, and this led to a slow rate of growth. And that is approximately 3% per annum. Acha, do let me know what this particular growth rate is known as, used to known as. This growth rate of 3% per annum is known as to another name. What is the another name that has been given to this particular growth rate? Now, during the 1960s to 1980s, okay. Now, this was as against the rapid export-led growth witnessed in certain other parts of the world, especially the countries in Southeast like South Korea, Thailand, and the Philippines. So if we talk about the rapid export-led growth has been seen in the other parts of the country of the world, but not in India. India was at the situation of Hindu growth rate. Very good. It is known as Hindu growth rate. The slow growth rate of economy, that is around 3% per annum, named as a Hindu growth rate. So India was facing a slow rate of growth, but the other parts of the country, they had the rapid export-led growth. Okay, now. So since 1960s, India's exports were mainly to the Soviet Union, that is USSR, and Eastern Bloc of countries. India even had a bilateral system of making payments where Indian rupee could be used to settle import-export transaction, and hard currency was not required. Now, do let me know, what does hard currency means? It has written here foreign currency. What does this means? What does this particular thing means? Ravi sir, do join the session on Telegram. On the YouTube. You can join the session on YouTube. Okay, if you are not able to see the video. If you are not able to see the video, do join the session on the YouTube. I don't know, because session is going very well. There is no disturbance in the video and all audio, because it is going on simultaneously on YouTube also. But maybe there is some certain internet issue with all of you guys. That's why you are facing this issue. Okay, let's start. So, Anupam sir is saying dollar. What about rest? Acha, everyone is going with the dollar. No, that's not dollar. Acha, first of all, let me know, is there any difference in money and currency? If I'm talking about money, and if I'm talking about currency, is there any difference between these two? It's a very basic terms. These are very basic terms. Let me know. Is there any difference? Okay. No. Currency is unit, money Indian. No difference is there. See, money can be anything. Hana, money can be anything which can be used as a medium of exchange. If you are using something as a medium of exchange, that is money. Let's say, for example, I wanted to purchase a certain product. Hana, I want to purchase this pen, let's say, for example. I can pay them in Indian rupee. I can pay the 10 rupee note or 50 rupees note or 100 rupee note, whatever the price of this particular product is. I can pay in form of some other category or some other commodity. Let's say I said I will be selling this particular mouse and I want to purchase this particular pen. This can be done. Hana, this is the barter exchange that used to happen in the country, and it is still going on, right? Right now, also in certain rural areas of our country, people are doing barter exchange. Now, what is barter exchange? When people are exchanging their commodities, because there was no paper currency used to be there. There was no currency was there, but people had need to purchase different things. So what they used to do, they used to exchange whatever commodity they have. Hana, but this was very difficult, because if I want to purchase the pen, Hana, and I have this particular mouse. So I have to find a particular person in the locality wherever I am living, that person who need mouse and ready to sell the pen. And this was very hard. So the currency was introduced, and after that the barter system slowly has been removed, but it's still going to be used in the country. Apart from that, if I want to purchase this pen, I can issue the check. If I do not have a cash, I can issue the check. I can transfer the fund in the account of a person, right? I can I can give my bond to the person of the same amount of this particular pen. So there are so many options are there, right? So if I talk about money, money can be anything. Money can be anything that is used for what purpose? To exchange goods and services. To exchange goods and services. So money can be anything which is used for the exchange of goods and services to fulfill your need and want. And currency denotes the particular country's currency. Like we have US dollar, we have Indian rupee, we have, let's say, Pakistani rupee, etc. So this is the difference between money and currency. So there are different types of money, like commodity money, representative money. We have cheap money, we have hot money, Hana. We have, apart from that, representative money is there, narrow money is there, broad money is there. Similarly, there is a concept of hard currency. Now, what is hard currency? 3 things or 3 points we have to remember to understand the hard currency. Hard currency is a type of currency which is demandable in international market. Demandable in international market. A kind of currency which have a demand in the international market. The second point is that the currency which is universally acceptable. Universal acceptance is there. It means each and every country is ready to purchase that currency. Each and every country is ready to convert the currency. Then, easily convertible. So the kind of currency which is demandable in international market, easily convertible and universally acceptable, that currency known as hard currency. And the opposite of hard currency is known as what? Soft currency. The opposite of hard currency is what? Soft currency. And soft currency is simply the type of currency which is not demandable in international market, not easily converted, and not universally acceptable. So simply the hard currency has these 3 features. And the US dollar, euro, yen, pound, renminbi, these are the currencies right now which are the part of your hard currency. So you can see that's why in the bracket it has been written as a foreign currency. So hard currency can be any foreign currency. It can be your country's currency also, but it will be foreign for the other countries. So the hard currency used to be the currency which or should be the currency which have these 3 features, right? Now do remember that. No, Ravi sir, it's not done. You can easily comment there. People are commenting on YouTube. You can comment there. Okay, now. Currency is physical is not the right answer. Now, do remember the hard currency will be the currency that has the 3 features that we have discussed. So this has been said that India used to have a bilateral system, and in which India used to have the Indian currency to exchange for the export and import. And here the hard currency is what? Simply a currency that is demandable in international market. Okay, so right now also, if you have remember, India has started trading with the Russia in Indian currency, also with the Iraq in Indian currency. And if we export and import more in form of Indian currency, like the mode of payment will be Indian currency, that will be very good for country, because this is how the Indian currency's demand in international market is going to increase. And somehow maybe India in a future can become a hard currency, like Indian currency can become a hard currency, because they start doing export and import more and more in Indian currency, right? So after dismantling of USSR, these export market went to disarray and India's exports plummeted. So exports market in USA and Europe had not been tapped to any significant large extent by Indian exporters. So this led to a severe decline in India's export. And that's why, if you remember, I have told you BOP. about the BOP. What is the full form of BOP? Let me know. So this is one of the reasons why the deficit BOP has been faced in the financial year 1990-1991, and that's what the one of the reason to introduce the LPG policy. Okay, so do let me know what is BOP first of all. So the India's export reduced, or we can say they were severely declined in that situation, and this was the reason, right? And because of this, the inflow of foreign currency stopped in the country and outflow was going on. And that's why the deficit BOP has been seen. Very good. That's a balance of payment. Balance of payment is what? A systematic statement between India and rest of the world related to the economic transactions in a financial year. Very good. Everyone is giving right answer. Now, apart from that, a large components of India's import was crude oil, as it is even today. So if we talk about the maximum import India is doing, that is crude oil. And because of this reason, we are still in the negative balance of trade. Now, what is balance of trade? These two terminologies are very different to each other. First of all, one is BOP that we have discussed. It is what? Or I can write like this. BOP is what? A systematic statement of economic transaction between India and rest of the world. Rest of the world I am writing as a ROW, in a financial year. In a financial year, this is balance of payment, which includes all economic transactions. Now, this is the important thing to remember. We are talking about all economic transactions. All economic transactions, right? Now, if I talk about what is balance of trade, so balance of trade is also a systematic statement, but only of exports and imports. Exports and imports. So balance of trade covers only export and import systematic statement, where the balance of payment cover all the economic transaction. So we can say balance of trade is a part of balance of payment, because the export and import are a part of economic transaction. So we can say balance of trade of a nation is a part of nation's balance of payment, which includes the export and import of the country in a financial year. So balance of trade, if you are talking about, that will cover only export import. If we are talking about balance of payment, it will cover all the economic transaction. Achha, what can be the economic transactions here? It can be export, it can be import, it can be investments, it can be tourism, right? Apart from that, it can be your remittance, it can be grants, etc. All these will be economic transactions. Difference between export and import. Exports means selling goods to abroad. It means when we are selling goods from India to abroad, that will be export. And import means purchasing goods from abroad. When we are purchasing goods from abroad, like USA, China, and etc., so that will be import. Import means we are purchasing from abroad. Export means we are selling to abroad. Okay. So let me know the difference between balance of payment and balance of trade is clear to all of you, and also the difference between export import clear. Yes or no? Let me know. In the paid class PPB, we haven't started yet, but on YouTube, we are taking the PPB classes at 8:30 p.m. Okay, at 8:30, we are coming with the PPB classes, but that's not a paid classes. That's a YouTube series I have started. But in paid class, the PPB classes will start around the last of this month or the last of July month. Then we will start the PPB here. Chalo, let's continue. So this is what we're talking about here, that this has been seen. And because of the import of the crude oil, the balance of payment is, or balance of trade, always stay at the deficit side. Okay. Now, with slowing export and increasing demand for oil, the country's balance of payment was severely affected adversely. It means it is very obvious. If the exports are less, it means inflows are less. inflows are less. Inflows means income which we are having from outside the country. And if the demand for oil, it means if the imports are more, it means outflows are more. Outflows are more. It means that is very basic, that there will be a deficit in the balance of payment, balance of trade. So in 1990 August, the first Gulf War broke out and the price of oil doubled from USD 15 per barrel to 33 USD per barrel. And this sharply jacked up India's import bill, leading to a payment crisis in June 1991. And this was one of the reasons that we have left only with the foreign currency that can be used for the 2 weeks, or we can say 14 days only. After 14 days, we will not be able to pay the particular payments of imports that has been set in the year 1990, 1991. And this is one of the reasons we have introduced the LPG policy. Okay, so to make matters worse, International Credit Rating Agency downgraded India twice after February 1991 to junk status. Okay, junk status means it's very risky to lend to country. If we talk about the credit rating agencies, what are the credit rating agencies? These are the agencies which provide rating to the country or the companies or the banks or the individual persons also on the basis of their credit history. So after this particular situation happened, crude oil prices increased because of the Gulf War, balance of payment was at the deficit situation. The credit rating agency said that India's rating is too junk. It means it is very high risk to provide credit to India, and no country was ready to give or to lend to us. And that's why we went to ask for a help with the World Bank and IMF, and they made it a compulsion that if you want, we are going to help India, but you have to do certain economic reform. And that economic reform was LPG, liberalization, privatization, globalization. Clear? So Nali ma'am, you can directly search Officers Adda 24/7. Okay, you can search Officers Adda 24/7. You will find the YouTube channel of Adda 24/7, and there all the classes of your JIB is going on. Not only for Indian economy PPB, also for AFM and retail banking. Niharika ma'am is taking AFM and Vishal sir is taking retail banking sessions also. Okay, now. Now, the triple vampire factors as described pushed India to brink of bankruptcy, with forex reserve covering only not the 2-3 weeks but the 2 weeks. This is one of the mistake in the Macmillan book. I have told you so many mistakes are there. So do remember, it's not 3 weeks, it was only for 2 weeks imports. It means 14 days. Right? When I will be uploading the PDFs, these concepts will be changed. But here I'm showing you the mistakes so that if anybody is starting from the Macmillan book, you should be checking the mistakes there. Okay, let's go. With forex reserve crashed to just USD 1.1 billion. That was the loss India faced at that time. Okay, now, on 1st of July 1991, India devalued Indian rupee by 9%, followed by another 11% on 3rd July 1991. So India was also forced to approach the World Bank and the IMF for emerging loans, and IMF approved a loan of 3.9 billion, for which the Indian government had to pledge 67 tons of physical gold. So let's understand this particular paragraph one by one. So first statement is saying, on 1st of July 1991, India devalued its Indian currency. Now do let me know, what does this devaluation means? What is the meaning of devaluation? Let me know. And if you do not know the value of devaluation, then do write don't know, so that we will discuss and move forward. So there are two terms: devaluation of currency and revaluation of currency. Devaluation, revaluation. Apart from these two terms, there are other two terms, that is depreciation of currency. Depreciation of currency and appreciation of currency. Now let me know, what does these terms mean? First of all, let me know, what does devaluation and revaluation means? Don't know. Underestimate. How you can underestimate the currency, Indian currency? And it will be done by whom? If you underestimating the Indian currency, it will be done by whom? Decrease of money. Decrease of money or decrease of the money of Indian currency? What? See, if I talk about devaluation, revaluation, what are these? First of all, it is done by the Central Monetary Authority of a country. Who is Central Monetary Authority of our country? RBI. So devaluation and revaluation will be done by RBI only. Okay, and why RBI doing this? In this particular terminology is what RBI do. RBI increase or decrease the value of its home currency. Its home currency in comparison to other currencies. In comparison to other currencies. This is the devaluation and revaluation. So the devaluation and revaluation will definitely be done by the Central Monetary Authority of a country, and RBI is the Central Monetary Authority. RBI increases or decreases the value of its home currency in comparison to other currency. Now, in case of devaluation, what RBI do? It first of all, it will be done by RBI. Here, RBI reduces the value of home currency. HC means home currency, okay? RBI reduces the value of home currency in comparison to foreign currency or other currency, we can write. In comparison to other currencies. And why RBI doing that? To increase its exports. To increase the export of the country, RBI reduces the value of home currency in comparison to other currency. That is known as devaluation. And the just opposite of devaluation will be revaluation. It will be done by RBI, obviously. But here, RBI will increase the value of home currency, and in comparison to other currency, etc., etc., that will be same. Okay, now why RBI doing that? Let's understand that. Why RBI decrease the value of its home currency, or why RBI increase the value of its home currency? Let's say balance of payment is in deficit. Balance of payment is in deficit. What does it mean? It means the inflows are less and the outflows are more. What does it mean? We are earning less amount of money from the rest of the world and we are paying more amount of money to the rest of the world. It means we are in the loss. And in that situation, we only left the 2 weeks foreign currency reserves. It means because of this process, foreign currency reserves were reducing. Okay, and if the foreign currency reserves are reducing, we will not be able to pay the import bills. We will not be able to take the loan from other countries also, because our credit rating is also decreasing. So what we have to do? We have to, the solution of all these things, the solution of all this thing is to earn foreign currency. The solution is what? You have to earn foreign currency. FC means foreign currency. Now, how to earn foreign currency? There are certain ways. The first way, let's say you can increase, or we can say you can decrease your imports. If you decrease your import, you do not have to pay outflows. Your outflows will be reducing if you decrease imports. The second option is investment in India from the foreign companies should be increased. You can increase investment in your countries from the foreign countries. You will be getting more money, more inflow. Third, more tourists should be coming to your country. Tourism should be more and more people should come to visit India. And in that situation, we will be earning money. The fourth, grants. Grants means the financial assistance. The grants should be increased. Let's say USA, China, Japan, Russia, they all are asking for what? They all are thinking that India is facing a loss right now. India is having a very good relation with us. So we are ready to give certain amount of money to India as a grant. Grant is a kind of donation. Hana? Then apart from that, the remittances. Remittance means transfer of fund from one place to another. So let's say the NRIs who are living abroad, NRIs are simply non-resident Indians. They are Indian citizens but living outside the country. So they have seen in the news, let's say balance of payment of a country is in the deficit situation, so they are transferring more and more money in the country. Or apart from that, you have other option, that is increase your exports. If you increase your exports, more and more inflows will be there, etc. So these are the ways that can be done to earn the foreign currency. Now, if we use the first way, that is reduce imports. If you reduce imports, what happens? Inflation will increase. What is inflation? The prices of goods and services will keep rising. So you can't reduce your imports, because we know in India the demand of goods and services are more in comparison to supply. So if you do not have supply, you can purchase from the outside the country and you can fulfill the demand. And if you stop the imports at that situation, it means your inflation is going to rise. That can be another big problem to the country. So we can't do that. That's a very risky way. Investment. To increase investment, what we can do as a country, as a central monetary authority, or as a government of the country, you can just attract the investment by saying taxes and duties has been reduced, by giving them a certain, let's say, benefits on the investment. But you cannot make it sure that the time when India is facing deficit balance of payment and you make the people of the other country or the investors of the other country agree that right, this is the right time to invest in the country. If the country is in the deficit, it is very obvious no one wants to invest in your country. So this is not in our hands. Okay. Similarly, tourism is not in our hands. We can show that India started Swachh Bharat Abhiyan in 2014 and India is much clean country now, but you can't force people that do come right now to visit India because we have a deficit balance of payment. You can't force people. So this is also not in hands. Grants, it's like another country feels like India needs help and we should help India, then we will get the grant, but this is also not in our hands. Remittance is also not in our hands. It's not like we all Indians are calling our relatives who are living in foreign country and asking, just give us money because our balance of payment is deficit. That's also not possible, right? Then if we talk about exports, this can be in the hands of government or in the hands of RBI. Now, how RBI is trying to make this possible? RBI reduces the value of its home currency. When RBI reduces the value of its home currency, what happened? Indian product became cheap for foreigners, right? And because Indian product becomes cheap for foreigners, that's how our exports will increase. And if the exports are increasing, that's very obvious, it will increase the foreign currency reserve. And if the foreign currency reserves increases, it means the balance of payment will come in the situation of surplus. Okay, this is how the term devaluation of currency works. This is how the devaluation of currency works. Let me know, is it clear? Yes or no? I have explained in very detail, in very depth. I hope it is clear to all of you now. Okay, clear to all. Those who are watching us on YouTube, do let me know, is it clear to all of you now? Now, this is what we have done. If we decrease imports, then the demand of people will not be fulfilled. And if the demand of people will not be fulfilled, it is definitely what we are going to face. The inflation will going to be rise, because then there will be a more gap between demand and supply. And the prices are keep rising. That will generate the inflation in the country. Okay. So, other terms are there. So, I hope devaluation, revaluation clear. Revaluation is the just opposite situation of devaluation. Okay. Now, the other terms we have, that is depreciation and appreciation. And this depreciation and appreciation, it depends on market. Depends on market forces. Depends on market forces. Now, what are the market forces? They are the demand and supply. Okay, because of the market forces, the demand of your currencies will be decided, and accordingly you will be finding the depreciation and appreciation. Let's say whenever the demand, when the demand and supply of home currency, है ना, is less in comparison to other currency, to other currencies in international market, that will be creating the depreciation. That will be creating the depreciation. Just opposite, when the demand and supply of home currency is more in comparison to other currencies, that will be a appreciation. Let's say, for example, let's take an example of rupee and dollar. Okay, so if the demand of dollar is more, it means dollar's value will definitely going to increase, and rupee value is going to decrease because rupees demand is not there. And that's a very basic concept. Hana, this is a very basic concept. In inflation, if the demand is more than the supply, what happens? The prices of goods and services keep rising. Hana, if the demand is more than the supply, the prices are keep rising. Clear? So this is what we are saying here. If the demand of rupee is less, it means the value of the currency will less. And if the demand of dollar is more, the value of dollar will be more. If we talk about rupee here, rupee is facing depreciation of currency and the dollar is having a appreciation of currency. Is it clear? Let me know appreciation, depreciation, both clear? Apple Addictor, sir, what is your real name? First of all, do make sure you always join the class with your real name. That will be more convenience for you and for the teachers also, right? And it's not confirmed yet. The date has not been decided yet. So don't worry about it. As the date will be decided, I will let you know. Clear to all. Let's move forward. So this is what we are talking about. And India was facing deficit balance of payment. No? We were facing deficit balance of payment. That's why what RBI has did, RBI devalued the Indian currency and 2 times. Hana, 9%, 11% in 1991. Okay, that is the devaluation. Now, the IMF loan came with stiff conditionalities, one of which was that country had to liberalize its economy. So IMF has given us loan, but the loan condition was there. What was the condition? The condition was that you have to liberalize your economy. Hana, you have to liberalize your economy. Liberalize means simply you have to remove the rules and regulations. You have to remove the restrictions from the country. Now, one of the path-breaking financial sector reform that were brought in was the direct result of the recommendations of Narasimhan Committee. There were 2 committees headed by Mr. M. Narasimhan, former governor of RBI he was, and recommended the 2 committees are enumerated here. So first of all, the Narasimhan Committee has given us a certain reforms in the banking sector. So Narasimhan Committee 1 and Narasimhan Committee 2, they have been formed at that time, and this committee has given us the certain recommendations that what should be done to liberalize the economy and how you can make it easy for the other countries, for the MNCs to come to India and start working. How you can make it easy for the public and private sector to work in the country. How you can make it easy to economy, Indian economy, to become open economy and allow to do export and import to the country. So those all recommendation has been given by whom? The Narasimhan Committee. That's what you want me to repeat? Repeat what? Nitin sir, it is na. So Nitin sir, I will let you know the exact date when we are going to start the PPB. Chalo, let's continue. Now the Narasimhan Committee 1 we are talking about. Do remember this question can be asked. It's a very one-liner question that the Narasimhan Committee has given the recommendation of which of the following matters or which of the following sector. And option can be like that: banking sector. Okay. Option can be 2, capital market. Option can be 3, Hana, your derivative market. Option number 4 can be your debt market, etc. These kind of options can be given. So Narsimhan committee has given recommendation on the banking sector. Okay, do remember that. So the recommendation of Narsimhan committee 1 will be these. First of all, establishment of a 4-tier hierarchy for banking structure with 3 to 4 large banks, including the SBI at the top, and at the bottom, rural banks engaged in agriculture activities. So first of all, what recommendation has been given by Narsimhan committee? The recommendation was that you have to do what? You have to introduce the hierarchy. And you all know what is hierarchy. Hierarchy is simply the chain of command you have to follow. Hierarchy is what? When you get the chain of command. Like for example, if I am having a certain problem, with my subject or with my classes, whom I should contact. It's not like I'm going to the CEO of a company directly to contact about this particular classes. Obviously not. So I have to go to the level of first level of manager of mine. Then if the first level manager is not resolving my issue, I will go to the level 2 manager. Accordingly, in each and every organization, company, you will find a certain hierarchy there, and that hierarchy will be found or should be introduced in the banking sector. This has been recommended by the Narsimhan committee. Now, the supervisory functions over banks and financial institutions to be assigned to a quasi-autonomous body sponsored by RBI. Apart from that, it also said by Narsimhan committee that you have to make a certain body that will be a quasi-autonomous body that sponsor that, like it means that body will get the permission from RBI that you have to supervise the function of banks and financial institutions. Like in case of RRB and Cooperative Bank, the NABARD was established. Like the NABARD have to supervise and NABARD have to monitor the activities of cooperative banks and RRB. So these kinds of autonomous bodies should be made. Okay. A phase reduction in SLR. Now what is SLR? Let me know. What is SLR? Statutory liquidity ratio. What does it mean? Shashi ma'am is saying no video. Jayaprakash sir is saying no video. You can check on the YouTube. The same session is going on there. I'm keep saying the same thing to all of you. What you can see, if you are facing any kind of video issue for today's session, you can go and check on YouTube. The same session is going on simultaneously on Officers Array 24/7, right? And if you are still facing, if there's issue that will be continued, you can mail to the support at the ID and they will be resolving their issue ASAP. So SLR is what? A statutory liquidity ratio. What does it? Percentage of NDTL as gold and government security banks maintain with RBI or with themselves, Manoj sir? They have to maintain with RBI or with themselves. See, if we are talking about the SLR, SLR stands for what? Statutory liquidity ratio. Now, what is it? When all the scheduled commercial banks, okay, we are talking about SLR. All the scheduled commercial banks have to maintain a certain reserve, have to maintain a reserve in form of cash, gold, and government securities. How much percentage? That will be a percentage of NDTL, and this percentage of NDTL will be prescribed by RBI only, right? And this have to be maintained with themselves. With themselves. It means all the scheduled commercial banks have to maintain with themselves only in form of cash, gold, and security. Okay, this is known as SLR, statutory liquidity ratio. And what is NDTL? NDTL is net demand and time liability that I will be discussing in the next class in detail. NDTL is in the simple language I can say net demand and time liability. What does it mean? Liability of a bank is deposit, right? But these deposit are of two types, demand deposit and time deposit. Demand means CASA, time means RAFA. So how to calculate NDTL? NDTL have a proper formula. Demand liability plus time liability plus other demand and time liability minus assets with banking system. Okay, this is the formula, but I will explain this formula in the next class because we are out of the time now. Okay, NDTL I will explain you tomorrow. So first of all, this is what we have discussed. A reduction in SLR has been set by Narsiman Committee. So Narsiman Committee said that you have to reduce the reserves that banks have to maintain with themselves in form of cash, gold and security. If you reduce the reserves of SLR, what happens? Bank will have more liquidity. If the bank have more liquidity, bank will be providing more loan to the public. And then the circulation of money in the economy will be more. So this is one of the recommendation of Narsiman Committee. Niharika ma'am, I will explain quasi-autonomous body in the next class again. Okay, because the sir is here, I have to leave from the studio. So this NDTL and quasi-autonomous body I will be explaining in the next class. First, let me know any other doubt in today's session. Any other doubt in today's session? Same time at 7 p.m. we are going to meet tomorrow. And at 8:30 today we are going to meet for PPB on YouTube only. No paid class, that's a YouTube session. Any other doubt? And let me know whatever we have discussed is clear to all of you. Okay, done. Chalo, so let's end here. And we'll discuss this. We will take from here in the next class, that is tomorrow. And on the application, Adda 24/7 application you all guys have now, just go to the batch detail and you will find the study plan there. If you are not able to find that, I will let you know in the next class. In the starting of the session, I will show you from where you can download the study plan. Okay, chalo, let's end the session here. Take care and see you tomorrow. And do revise the concept, okay? Okay, chali, take care all. Bye-bye. Thank you so much, everyone.